Before we get into today's video, can I just ask everyone to please take it as entertainment only. I am not a financial advisor, and of course you must do your own due diligence.
Yeah. Coincidence. Yeah. Coincidence. Yeah. Coincidence. Something that happens by chance, I think not.
What's the crack, everyone? Welcome back to Buy Wholesale. Hope you are all well. Today's video is another wee treat for you guys. It's one that is being proven to be very popular over the last sort of week or two. We'll get into why that is. The stock is Workhorse, ticker symbol Wkhs. Many people probably have heard of Workhorse over the last year, as it has been one that has had one hell of a rise. And we're going to explore why that was the case and why did it ultimately end up in Cape Town. The road to Cape Town is very, very bumpy, as we know, guys, and this one really tanked very, very hard. But before we get into all this great stuff about why this stock is making a comeback, please like, please subscribe, help me grow the channel, guys. Really do appreciate everything that everybody's doing for me here. And without further ado, let's get into today's video. So if you just go on to Workhorse's website here, you can see what they do, guys. They do electric vehicles. Electric vehicles are very, very popular, especially since 2020. We've found that every sort of startup company got a lot of traction. Nikolai, for example, Workhorse was there, XPeng, Neo, all these, obviously you've got the best in class, in my opinion, Tesla. And the list really goes on. Northstown Motors, Ford, Volkswagen. I mean, it's populated with many competitors. Workhorse, even a year or so ago, was nowhere near any of the standard of any of those companies. It was all hinged on a UPS contract, which ultimately they didn't get. It went to Wkhs, and that pretty much just says it all, really, guys. They went in for a contract and they were proven to not be the best in class or the best choice, and they didn't get it, and it's tanked hard. Their financials are a horror show. It is not a good, anybody that says differently is lying to you guys. It is not a good stock. I mean, they keep pumping on about this year. We've got the drone service. So profit margins on drones aren't that great. And they're very populated again. They've got this system, but who's using the system? Oh, let's have a look down. Oh, we worked for UPS in 2017. Well, that's great, guys. 4 years later, where are you at? Oh, that's right, you didn't get the contract. Didn't get any of this 2018, 2020. What happens to 2021? Where's that? Where's the new news? There is no new news, guys. And the reason I'm going through this so harsh and not reading up about it is because I know about Workhorse, I know what they were about. You can see here, it was all hinged on the deal. It went through. Lordstown Motors is another sort of pump and dump, if you want to call it that, guys, and they also have a 10% stake in it. So anything to do with Lordstown Motors or Workhorse, I would stay clear if you're thinking it's a stock for the long term, if you're thinking it's a good investment in EV plays. I'm not saying that isn't the case. I'm not saying that these won't be there turning around. All I'm saying is, based on the facts, they didn't get the deals, they were hung up on all that. Their financials are terrible. If you're looking for an EV space play, I would actually probably invest in the index funds that cover a lot of them, or I would just go for best in class, the likes of your Neo, your Tesla, or whatever. I just wouldn't be bothering with Workhorse. Just put up the day chart on TradingView here. We can see the crack with Workhorse then. So started way back here, as I said, this time last year, guys. The pump started. People started getting really excited about it, getting pump. Everything was going good. Talk of the deal, talk of the contract, all the hinge on the contract. People were getting more excited. At a different time, everything you pretty much touched turned to gold. It was going up. And around sort of the 10th to the 18th of February, it started to twiddle off. And then the news broke that they didn't get the contract, which was the whole thing it was propped up on, because it was worth billions to them. And then it went down the toilet, guys. Down to about $13. It just got worse. We've seen lows in and around the 13th of May. So less than a month ago, guys, new lows of $7. Now it's had a wee bit of a resurgence back up. And it looks to be that we're sort of breaking back into the support channel here. If we zoom right in on it here, we'll have a laugh. Jeffrey's at it, and you can see from the lows right up till, well, even the real highs we've had a sort of 153% rise if you cut as sweet as a nut. You know, and yesterday we had a sort of a 6% rise. It looks like it's going to go up in the pre-markets here. Why would anyone want to be jumping in a stock that couldn't win this contract? It's you know, it hasn't really done anything. There's no decent contracts. It's making about 1,000 vehicles a year, which means it's pretty much just hemorrhaging money. It looks as dead as a doornail. Well, I know the answer, guys, and I think most people know the answer. I've just gone on the Motley Fool here. He just sort of sums it up here. Why Workhorse Group's stock is surging today. Shares of the embattled electric vehicle startup Workhorse were trading sharply higher on Thursday amid an apparent short squeeze, guys. It's another pump and dump. Now, I haven't covered in a few of these here recently. The reason being, YouTube seems to really like watching these videos. A lot of people are pumping it, and I just thought it'd be real and be like, look, guys, if you're just jumping in on this, you just need to know the crack. Don't be investing in this there because you think it's a great company or it's going to go places. That maybe there's a slight chance that it could turn around. Of course it could. But generally speaking, guys, if you're looking to invest in this long term, don't, because it's not a stock for that. But there could be potential for money because it is the target of a short squeeze. Workhorse is one of several stocks enjoying unusual rallies this week. Like many other companies, the company was favoured by members of the Reddit Wall Street group, guys. So we know all about them. AMC, GameStop, things like this here. If they get the pump, they can really take off to the moon, guys. I would prefer it not to be happening because it's manipulation. It makes it very hard to understand stocks and values, and I've been caught up in a couple of ones that I didn't want to be involved in. For example, Zomedica, which is a great stock that I had, and we've had good wins on that. I got out of that months ago because it looked to be a Reddit one, and I just didn't want it because it just skew whiffs any valuation, any attempt to try and make an understanding of where the stock price could go. It just gets manipulated. There's another stock that I had, Tattoo Chef. It's another one. It looked good in paper, but now it's getting pumped and it just looks skew whiff. So I'm out of that because any sense just goes out the window with these, unless you know exactly what you're getting involved in. And this is what this one's about. So the term used when a heavily shorted stock surges higher, leading short sellers to rush to close out or cover their short positions by buying the stock. In the past, members of the Wall Street bets have triggered share price surges by buying out of the money call options on heavily shorted stocks. That could be what's happening here. A call option gives the owner the right but not the obligation to buy shares at a set price. When a dealer sells a call option at the price well above the stock's current levels, the dealer will generally hedge the option by buying shares of the stock. If any investors buy the option calls as a coordinated action, the volume of shares bought by the dealers can be enough to push the stock price sharply higher. Add in the short squeeze effect and the price increase can be dramatic. That appears to be what's happening now. Anybody that is thinking, oh, this is a good stock and get into it, listen to me. Do not buy it for that reason. Buy it because you want to get involved in the short squeeze. Buy it because you think there's a potential. Buy it because you're a bit of a gambler. Do not count this as investing because this is not. This is at best day trading, swing trading, fingers crossed, finger in the air, hoping for the best. Trading. Look at these articles, guys. Face it, there's no hope remaining for the Workhorse stock. May 31st, not that long ago, guys, a week ago. Investors are left to try and determine if there's any hope for the Workhorse group after losing out in the postal contract, which would have been worth $6.3 billion to the company, and has seen government purchase 180,000 new trucks to upgrade its national delivery fleet. For all of 2020, the company posted sales of just 1.4 million, not worth time or money, guys. Profitability remains a long way for Workhorse groups, and yet at the start of the year, the company had a market capitalization of nearly 5 billion based on its share price and the number of shares outstanding, guys. Come on. Without the contract to supply new vehicle postal trucks, Workhorse stock has bound to come back to down the earth. The company has responded by losing out on the contract by engaging in a political battle with the company and has awarded a local postal service, Wisconsin-based Wkhs. So toys out of the pram, they're starting to cry about it. Oh, it wasn't fair, we should have won. Life's not fair, guys. You know what I mean? That's just the way it is. While the electric vehicle space is likely to benefit from $174 billion the Biden administration has promised to invest development in the US electric vehicle market, Workhorse Group itself is not yet benefiting from any government-related contracts. Well, why would it, guys? Nobody wants the product. You're not going to get no grants unless someone's buying your fucking thing. Deteriorating finances. The company's 2021 production forecast of 1,000 vehicles was lowered from a previous forecast of 1,800 vehicles, nearly half, guys. Its most recently quarterly results, Workhorse Group reported revenue of 521,000, missing analyst estimates of 2.6 billion of revenue by a lot. Workhorse reported a quarterly loss of 136.6 million due to the reduction in the fair value of its 10% holding in an electric company, truck Lordstown Motors, which has been struggling with its own issues. We're not even going to talk about Lordstown Motors, but guys, the exact same guff. Again, they focus more on your general cars. Where the list is so long of EV plays. Where do you put Lordstown? up the top. Fucking throw that way down the bottom. Garbage. Workhorse Group has been around since 1998. So, you know, they've had 20 odd years to make this year and they're still making 1,000 vehicles. What's the next 20 years going to look like? Has been publicly traded since 2010. That's a long time for the company to be around and remain unprofitable. Speculation persists that Workhorse could be targeted by a takeover by a large, more established automaker. At this point, that looks like it would be the best case scenario. And just the last bit, there's no reason to buy Workhorse stock. So there you go, guys, absolutely grim. Hopefully that's clear. Do not buy Workhorse for any other reason than the short squeeze, the pump, dump. So when you're sitting at about a price of $13.80, if we were to get up to about 19, you're talking in and around 40% rise. And I don't know about you guys, but 40% would be nice. Pumped in $200. I'm gonna pump in probably another $100. Just thought I'd throw in a wee bit to see how the next day or two goes. And my intentions will be to ride this up to in and around $19, and then I'm gonna pull it all out and run to the hills. Now, it could go on much higher, guys, but the thing is, see with these pump and dumps, guys, you just don't wanna be greedy. You just wanna get in, get out. That's my opinion. Now, you could miss bigger rises. Of course you could, guys, and if you want to hold on, I might even consider, depending on how it goes, while I'm waiting at the 40%, you might get a bigger rise. I like the scenario if you double up, leaving the house money. But initially, I'm looking at this and I'm going, okay, let's jump in, let's play it. We've got above this line. That is exactly why I bought in. I thought, it's got potential. Look, you can nearly see there, it was up to 18.35 at the peak. I'm in, I want to get this rise. We'll see where it goes. The only other option, guys, that you could play it, again, you have to do your own due diligence and make your own choices. The only other way you could play it is if you were to jump in on eToro, for example, you can do trail and stop losses. I would be all over the trail and stop losses. Do that, protect yourself, guys. But if you are investing, make sure you know you're literally playing a slot machine here, guys. It's a gamble, it's a risk. And that's the video, guys. If you have found this informative, please like, please share, help me grow the channel, all that good stuff, guys. I'm gonna keep these videos kind of coming here because there definitely seems to be a lot of interest in them. If you go down the description below, also, guys, you'll see links to free trade, my writers articles that I've featured in. You'll get discount codes on crypto. We're in, we're going large, Workhorse Group. I'm balls deep in again, and we'll see where this goes, and I'll keep you posted, guys. Get me on the Instagram as well, BHSDMV. And until next time, guys, enjoy the rest of your day. Peace.
Yeah.
Coincidence.
Yeah.
Coincidence.
Something that happens by chance, I think not.